Hi, my name is Jim and I was retired. Can AI improve upon my DIY retirement spreadsheet? I've built an Apple Numbers spreadsheet to help me manage my 3-bucket portfolio. In this week's video, I'll put that spreadsheet to the ultimate test by seeing if Gemini AI can help me build a Google Sheets version of it. This will be a Gemini versus Jim MI. Is AI the future of retirement planning, or is my native numbers version still the gold standard? Let's dive into both. First, why do we have a 3-bucket portfolio spreadsheet? Quicken tracks my transactions, but it doesn't do a very good job of sorting all of those assets in the retirement portfolio into the 3 buckets. The bucket of assets that I need to withdraw within the next 3 years, the next bucket for the 5 years after that, and the third bucket for the long-term equity. That takes a little bit of skill, and so I've mastered this numbers version of the portfolio by bucket to manage that, to manage all of my assets across those buckets. I also look at the tax buckets, whether it's a taxable account, tax deferred, or tax free. See that whole playlist there about this approach. This does not replace the need for Bolden to look into the future. That's my go-to application to look into the future. And again, I just manually put the numbers from my Quicken or this spreadsheet into Bolden and let them project into the future. But this is a good way of managing today and what asset allocation you should be having across all of your buckets, and specifically how you do the time segmentation for a successful bucket strategy. I'll go on screen and show you first my version in numbers, and then I'll jump into the Google Sheets version. Now, both of these will be available for download on my Google Sites for free. And again, I am sharing my DIY retirement experience with you for free. That's the purpose of this channel. So here is the numbers version. It starts with this Quicken data. Now, this is sample data. This is not real data. I've just made sure that this sample data is rounded out and squares up for the version that I'm using in numbers and the version that I'm using in Google Sheets. Same data, that's what's here. If you have Quicken, you should be able to download your investment spreadsheet, add your cash outside of your investments, and move on through this. This is the way the numbers version works right now, and there are some manual clicks to it. First is when you paste it in to this sheet and then go to the sort by maturity spreadsheet that I developed for the fixed income, you have to manually go in here and recreate the table and sort it with the sort command here to sort date by maturity. I've automated here this formula to extract the date from the name of the security to do the date of maturity sort. But it is a process of manually making sure that if you've changed securities recently, to import it from the first sheet into the second, do the sort of the table. But then when you do that, you go to categories and turn the categories on, and it instantly puts together your categories based on years, which is how I get this chart over here of the maturity by year of fixed income to see how I've queued up a ladder of fixed income over the next few years. These 3 columns here were recently added to allow me to calculate the yield to maturity, the years to maturity, and the coupon rate. Again, using that same formula here that I use similar to the date formula over here to extract the coupon rate from the descriptor that you're downloading from your brokerage firm into Quicken. The next thing on the numbers version is all of the Quicken data comes over here. And again, if you sell an asset or buy a new one, you have to be careful with changing the rows in the Quicken data and allocations and in 3 buckets to allow for the new row, and you have to manually control that. That's the process with numbers, but it's a very clean, copy this, bring it over here to this table. This allows you to look at the allocations and you assign a different asset class. Quicken data will often generalize their asset classes. This allows you to turn domestic bonds into CDs and treasuries, asset mixtures into U.S. stock if it's predominantly U.S. stock, and allows you to, if it is an asset mixture, assign the right formula for your Wellesley income or Wellington fund, whatever you have in your portfolio. This allows you to do that. Once you've got these true asset classes in your numbers version, you come down here to the assigning the mixture into the overall asset allocation here, and gives me a whole picture of, again, this is sample data, of the overall asset allocation of the whole portfolio. Compare that to your target allocation. It describes how much you need to move. The overview charts here include the CAGR calculation that I've used for quite a number of years. I'm looking at changing this. And then over here, the average expenses minus fixed income equals required withdrawals, sizes your time buckets. So over on 3 buckets, you have the Quicken values here, information. It's all in the 3 buckets sheet, and you add the time bucket and tax buckets. Tax buckets include the brokerage, the IRA, the Roth IRA, the Treasury directs are taxable, brokerage accounts are taxable, IRAs are tax deferred, 401k, Roths are tax free. You enter them that way, and then also assign the time buckets to them based on when you want to use those assets. That gives you the 3 time buckets, the allocation within the time buckets. One of the most important thing on this sheet is this sheet down here, this part of the sheet here, which calculates based on that overview chart, based on your required withdrawals, that drives this. As you can see here, if you edit the formula, you're going to go back over to this sheet where you've totaled up what you think you'll need over the next 3 years in one figure. That size is this, bucket 2, and the remainder is in bucket 3. And this tells you how much, in this case, about $100,000 in bucket 1 needs to be redeployed, 85,000 of it into bucket 3, and about 17,000 in bucket 2. And that is the heart of the time bucket reallocation sheet. Just like this part showed you the asset current allocation and your target and how much you needed to move for your overall asset allocation, this shows you the overall time bucket allocation. And over here on this part of the numbers sheet, I had a tab for bucket 1 with the close-up look at bucket 1, close-up look at bucket 2, and a close-up of bucket 3. And here is the new Google Sheets sample portfolio by buckets that Gemini helped me create in Google Sheets. And it begins in a similar way with the Quicken values pasted here. Google Sheets has the ability to define a table that's then later used in other formula. So I've just put a table around the core part of this data. But when you paste new data over it, it populates this table automatically. So this is where Gemini and Google Sheets starts to make a major win. Rather than manually sorting a table of your fixed income maturities over here like you did in numbers, this formula here that Gemini created automatically takes all of the data on the prior sheet and brings it in the right order, sorted by date of maturity, automatically. It actually took all of the calculations up to coupon rate, which it also extracted automatically out of the name, just like the date of maturity is, but they did it already with this sort. All I had to do was put in this manual calculation here for years to maturity based on today's date, and the calculation of the yield to maturity. Then this table was complete. But in order to do the view of it, I had to do a pivot table, which then pivoted the data to look at the date of maturity by year, lumping it by year to create this chart here. And then this is where the Google Sheets version gets a little bit more complicated and crazy. Before it took the Quicken data, it wanted me to build this, an asset map. This asset map rebuild, where it had me build an asset map for every stock symbol or name in the portfolio, and made sure it either had its automatic computed class or the manual class I assigned to it. And you only have to visit this every time you add a new security holding to it. It will actually, in this character here, this formula here, looks at the Quicken values here, data, and says, I recognize everything but these. And then you'll copy these over to this column, and it will start to give you the process of either automatically calculating what the class should be or giving you the ability to add a manual. This allocation sheets then took that data from your Quicken data and the asset map and created this whole complex series of tables that allowed you to then give everything up to G calculated. In H and I here, you manually put in your tax bucket and your time bucket. This manual process of adding the tax bucket and time bucket allowed you some more control. It automated everything else, but you had to do that. Then I was able to use tables here to do the summary of time and tax buckets, and then produce these kind of charts here of the time buckets and tax buckets, as well as the summary of overall asset allocation, compare it against your target bucket. And down here, I was able to create a version of the buckets, time bucket rebalancing, of taking a look at your bucket 1, bucket 2, and bucket 3 totals to do that. The overall asset allocation chart was a separate tab in the Google Sheets to look at your overall asset allocation. But this whole process of the asset map rebuild was something of a struggle. And again, I had to have Gemini suggest YouTube videos on how this stuff works. And on the overview charts, I incorporated the CAGR calculation, but Gemini had a couple different ways of calculating it. It came up with this RRI formula, which yields a really different number. And I asked specifically from Gemini, like, how is this applicable to a retiree spending money each year out of it? My CAGR formula included the average spend. They gave me a full CAGR calculation here. Let me show you this formula here, and that corresponds to the actual economic calculation for a CAGR that includes your withdrawals. So in the end, the Gemini version that we created in Google Sheets had very complex formulas. AI had to assist in me building those formulas. And it took a conversation of more than 30,000 words between Gemini and Gemini to come up with the approach. As opposed to numbers, I was able to do a lot of that with very simple formulas that I could understand. I didn't need AI to assist in the numbers version. I think in the end, if you're going to use AI to create a spreadsheet, be very careful. You want to make sure you understand and AI understands how you are creating that spreadsheet to do what you want, not what Gemini wants to do. I had a couple occasions where I had to push back on Gemini and say, stop your thinking. Let me explain my rationale for doing a portfolio by buckets spreadsheet. Among the things they wanted me to do was to change the Quicken data. Again, I said, I want to import the Quicken data here and not touch it again in your process. And I had to coach Gemini to come up with the right Google Sheets to obey that rule. Now, both of these will be available for download for free on my Google sites. See the links below. Now, the numbers version is in a zip file. You can't upload a numbers file to Google Sites, but it's packaged in a zip, and you should be able to download that onto your Mac and use a numbers version. Again, you'll have to go in and make your own edits to it. On the Google Sheets version, you'll want to save to your own Google site and then use it. The view only mode is just there to view, or download it to your computer and pull it up in Excel if you'd like. Both versions should work as described here. I'll close with my standard warning. I have no initials after my name. I am not a professional planner. So take these as entertaining ideas from one DIY retiree to another. Always do your own due diligence and seek out a professional if you need one.